examination question has been asked a few times, and this problem what we are going to discuss now as is similar problem which is there in revision test paper of institute, C Institute. Let's look into the problem. Interesting problem. I can say that quality of a CA problem. Let's have a look. In capital gains chapter, Sumit purchases 2,500 non-listed shares on 16th of August 2008 for rupees 10,000. It's a calculation problem, we have to be careful. On 2010 he gets 500 bonus shares. On 20th of October 2016 he acquires 1,500 shares at the rate of 15 rupees per share. He sells 4,500 shares of these shares to Amit Ltd. That means the entire portion has been sold. On 12th of February 2024 at the rate of 150 rupees per share. Brokerage of sale is 2%. That means expenses are incurred on transfer is 2%. He owns one residential house property. He purchased another residential house property on 20th of June for rupees 3,50,000. Ascertain the amount of capital gain. See, the problem looks very simple, but it is not. Simply because, see, what is the examiner's idea in the problem? He asked you to compute a capital gain and asked you to discuss on the 54F, because the assessee is selling the shares buying the residential property, house property. 54F will trigger. But the problem here, issue here is that 54F exemption is not on full value of consideration, it is on net consideration, meaning full value of consideration minus expenses incurred on transfer will be the net consideration. In this problem, it is given 2% as the brokerage of sale. There are three types of shares: original shares, bonus shares, rights shares. These three shares, a categorization need to be done and rank the proposal which way to go and compute the lowest capital gain possible. Let's look into the problem. Tricky, again I am saying tricky problem, please be careful. Original shares, bonus, rights. Full value of consideration, sale price is given as 150 rupees per share. So number of shares first, number of shares 2,500, 500, 1,500 shares. Full value of consideration 2,500 at the rate of 150 per share, 3,75,000, right? 150 into 2,500, 150 into 500, 75,000, 150 rupees per share, here 2,25,000. This is the full value of consideration. Less brokerage, which is nothing but the expenses incurred on transfer, given in the problem at 2%. So 3,75,000, 7,500, 1,500, 4,500. Net consideration is 3,67,500, 73,500. Here it is 2,20,500. Please check. Now, all our long-term capital gain looks like, because the original shares have been purchased in 2008 and the rights shares had been acquired in 2010, 11, 8 and 9. Right. August, 8, 2008, 9, 2010, 11 and 2016, 17. So all are long-term capital gain here, asset, long-term capital asset, which will result in long-term capital gain. So we have to apply index. Indexed cost of acquisition. Index has been given in the problem. The first case, what is the acquisition price? The acquisition price is 10,000 rupees. So 10,000 into 348 is the index given in the problem, divided by 8, 9 is 137. Determine. Then, second, cost of acquisition in case of bonus shares is 0. Third one, we purchased price 15 rupees per share into 1,500. 22,500 into 348 divided by 16, 17, index is 264. Compute. Friends, once you compute this amount, what will be the answer? Long-term capital gain. Listen, long-term capital gain, whatever is the amount coming here, I think here it will come 73,500 because 0, right? Cost of acquisition. So if you compute the long-term capital gain, I think I'll have to compute. You have to give me a minute. I'll bring the calculator. Just a minute. So here, 10,000 into 348 divided by 137, giving me 25,401. In the second case, 22,500 multiplied by 348 divided by 264 is giving me 29,659. So how much is the long-term capital gain now? Minus 2,500 is giving me 1,90,849 here, and here 367,500 minus 25,401 is giving me 3,42,099. Here it is 73,000. Oh, sorry, this is 0, right? 73,500. So this is the long-term capital gain now. Listen, friends. Here, what is happening? We are going to apply 54F. Section 54F talks about investment in the residential property. What is the residential property investment which is given in the problem? 3,50,000. Whether this 3,50,000, in which order we should compute? That's what is called a ranking. In which order we have to compute? What is the capital gain? Capital gain divided by net consideration. Because 54F is a capital gain exemption based on net consideration. 342,099 divided by this divided by this divided by this. What is a percentage? So, percentage, here it is 100% because cost of acquisition is 0. 100% Here 342,099 divided by 367,500, 93%. And here 198,49 divided by 220,500 is giving me 87%. So if in the ranking, this will come as a first rank, this will come as a second rank, this will come as the third rank. Why? The percentage, if it is higher, first rank. So now how much is going to be invested? This 3,50,000, first rank 73,500 needed. So against bonus share, we should give exemptions under 53F 73,500. 54F exemption is 73,500. How much is the balance now? 73,500 gone for first rank. So how much is the balance which is available for the second rank? 3,50,000 minus 73,500 we have already utilized. So 2,76,500. How much is the capital gain here? So we can utilize 2,76,500. Here we can utilize. Here we cannot utilize any exemption. That's what is this problem. Friends, very interesting problem. Please practice this problem 2-3 times. What's happening? Share purchase on various things. Original share purchase, bonus, cost of acquisition 0, we have taken. Rights, index can be applied, we have done. After that, 54F exemption ranking. 54F total exemption possible is 3,50,000. Then 54F is a net consideration section. That means exemption will be based on net consideration. So we did the ranking. This is first rank, this is second rank, and this is third rank. We utilize the 54F exemption based on the ranking. 3 times asked in examination, but this problem is given in the revision test paper. Practice this problem. Thank you very much.